Welcome to Trading Lounge and the US indices for the 5th of January. So I'll start with the NASDAQ because it's been leading to the upside somewhat. You know on our website that we've got the SP500 as a top in place, so I don't need to go into that particular count because you're aware of that top Elliott Wave count we've got for that. With the NASDAQ here, we are also seeing divergence in this particular move up through here. And what I mean by the divergence here is that we're seeing lower volume over this. This is a weekly chart, so quite a few weeks here of lower volume and higher prices. So we're touching up very close to the 13,000, which is a Fibonacci number, so, the trading levels, using the price here as a Fibonacci relationship. We'd expect a correction at that point, and the same with the SP 500 coming up into the 3,800. As you know, also too, from looking at wave 3 over here with an A and a B and a C here for an expanded flat. Not a very good expanded flat, more like a running flat in this case, an expanded flat with the S&P. So from this wave 4 here, it's possible to have this move up here as 5 waves for wave 5 here and having a top in place and looking for a large turn here. There's also a good case to look at all of this move up here as wave 1 and coming back for wave 2 as well, especially when we look at some of the stocks. If we just have a quick look at Amazon here, it does appear with Amazon here that we do have a corrective pattern here for this, so we should still see further upside. I won't go into any more stocks today, but just to point out that there are stocks that need to move higher at that stage. So there's a good case for higher ground as well. But let's go in and take a closer look at the count to the upside here. So from this wave 4 low here, I've been counting it as 1 and 2 and all the way up for 3 here, an A and a B and a C for wave 4. There is also a case as well that from this low here, we can count this as 1 and 2 and 3 and 4 and 5 here. So looking at that as wave 1 here, back for wave 2 here, then wave 1 and 2 of a smaller degree and still climbing to the upside there as well. You know, when we looked at yesterday, we looked at the S&P 400 and the Russell, and all of those markets count this up here as wave 1 and back for wave 2. So there is a possibility that we can call that into play as well. Now, that will reveal itself further in the trend if we go higher up through here. Now, of course, as I mentioned, we'd be looking at the 13,000 as a resistance area. It didn't quite get there. We've seen crude oil get sold off at $50 as well. I'm not sure what the news was for all of that sharp move down. Just waking up in Australia here at 6:30 in the morning. So, but I have been counting this, as you know, as 1 and 2 here, and then counting up as 1 and 2 and 3 and 4, and going up for wave 5 here, for wave 3 here. So we're looking here at a possible wave 4. Now, I know there's problems with this because we'll be overlapping wave 1 with wave 4 here, so I am aware of that. It's also possible to count this as wave 1 here and back for wave 2 here, then up for wave 1 and back for 2. So we've been doing that as a count with the S&P 500, and we'll be looking at that as well. Either way, whichever way we look at this particular move down from the top here is in 5 waves, and we'll take a closer look at that on the tick chart. So that means that we'll have a rally and then we'll have another move down, but we'll look at that as well. But let's just continue to move in here and track the count that we've been working with a lot, up through here. So from this wave 4 here, I'm just going to make that a little bit larger here. As I mentioned yesterday, this platform has been had a major upgrade, and it hasn't brought through all the correct font sizes and lines and all those sorts of things. So I've needed to start working through that and adjusting those. and get to understand all the new functionality on the platform. So I will be moving the labels and so on a little bit slower, so just bear with me on that. So look, this has been our count, as you know, as 1 and 2 here, then 1 and 2 and 3 and 4, and then 1 and 2 and 3 and 4, and then 1 and 2 and 3 and 4 and 5. I thought we may have gotten to the 13,000, but it's not the case. As I just mentioned then, we'll look at that as wave 3 up here and wave 4 over here. And we're looking at this here as an impulse wave. So wave A here, moving up for wave B, and then down for wave C. There is a case here, because we didn't really get a nice 5-wave structure here, there's a case for a bit of an A and a B and a C wave here as well. So it is possible that the market can move up higher from that point. But our case today, I mean, in the slightly bigger picture, we don't really want to see this market. Let's just go in a little bit closer for this here as well. So, you know, what we want to see, even if you can see how this is like a B wave here, you know, and 5 waves here for the C waves. So let's just imagine for a moment that we've got our 5 waves down here, which we have, and then we'll see a move back up into this space here, a retest of the 12.8 at that point. So if I just copy this line here and put that there, because that's 500, 8, so the Fibonacci numbers 3, 5, 8 here for those minor levels. This line here is the 38.2% retracement level. So it does appear that we could possibly get 5 waves down, 3 waves back up for B, and then another 5 waves down here for this to finish. Roughly around the 38.2%, sort of hanging on to the 12,500. So when we have a closer look at that, if that's okay, this is just 20 ticks here, okay? So what we can see here is we can see, just, I won't label it, but 1 and 2 and 3 and 4 and going down for 5. So that's wave 1 here and 2 here, then 1 and 2 and 3 and 4 and 5 for the 3rd wave, 4th wave and 5th wave here. So at this stage, we do have 5 waves here. I can also see, well, we've got that rally here and here, so we can check that out. But 1, 2, 3, 4, 5 here. So that could be a 3rd wave, that could be a 4th wave. So 1 and 2 and 3 and 4 here, and then going up for 5. It's a little bit early to tell how this is going to play out. And if it's a wave 4, then it can get a bit more complicated. So, but if that was the case, let's just assume for a moment we get another little push up there, that would give us 5 waves up, 1, 2, 3, 4, 5. If that's the case, then we would have a correction in 3 waves. And then we would have another 5 waves up to that 50-60% retracement level, and then we would would move down from that point. But as I mentioned, there is a case here that we can have an A and a B and a C wave here, so it is possible for this market to continue up here. So finding that 61.8% and finding support on that, which is really handy to have it at the 12,800, by the way. So if you get a classic trading levels pattern sitting on here, then you can trade that to the upside at that point. Well, day traders can anyway. But there is a clear 5-wave structure down here, so just be a little bit patient. What I want to see, what I want to be mindful of here is when this move comes down, let's just say that they've got some sort of equality at this point here. So what we don't really want to see after we've got those, after we get 5 waves down here, we don't want to see it going any lower than that. If it goes any lower than that, then this 5 waves here, this 5 waves may be shorter than this one here. It may be only 61.8% of the length of this here. One of the other things here too is this was really fast and sharp. So it's a typical A wave sort of move. So what we want to see with the C wave here, we want to see it on more of an angle. And I'm dramatizing it, but we want to see it on the more of an angle that is, the more upside you're going to, faster the upside's going to be. But if this move down here is just as sharp or sharper than this move here, well then it's likely to be a 3rd wave to the downside. That means we'll be going much further down at that point. So this will just be wave 1 at that point, wave 2 here, and going down for wave 3 here, or going down for wave 1 of 3 and back for 2 and down further at that point. So it's highly possible that we can see that occur at that point. So I'm just going to move this now so you've got a bit of an idea on that. So we really want to sort of contain this situation here for the NASDAQ here in terms of looking at 5 waves in this space. We want to see it. We want to see that angle a bit like that, and then then we can look to move to the upside. But once that's in play here, anything below that 5 wave structure here, then we're going to be looking at a bigger bearish picture to the downside. And that means that we need to be short under here. So yeah, we'll be all over that, but just pointing that out at that point. So that's the NASDAQ, and this is the SP 500. So this, we could look at this as an expanded flat because it's taken the low of wave A out here. And once again, as wave 4 here, we're looking at 1, 2, 3, 4, 5 here. Can be wave 1 and 2 here, or it can even be wave 5 sitting this blue wave 5. So from wave 4 to wave 5. On our website, we've got a count here that's finished at that point and will be coming down further from that point. So we be mindful of that. We need to gather evidence. Okay, that's what we need to do. We've got divergence in here. We've got, this is the weekly chart. We can see that, I know it's over Christmas, so it doesn't make it easier, but still it's lower volume while the trend is moving up. That's divergence, and you'll see that in the indicators, and that's telling you that the trend is going up on lower volume. And for a trend to be a trend, you really need increasing volume in the direction of that trend, be that up or down. So let's just cruise in here and have a look at the same as well. We can also look at the alternative count with this. So like we had a look at yesterday, when we looked at the SP 400 and the Russell, we can count this as wave 1 here and 2 here. So maybe this can be wave 3 here and 4 here and 5 here and finished here. So this is why we need to be extremely careful what occurs at this point here. We know 8's a profit-taking number. Once again, we didn't quite get there. I think crude hit on 50. I need to double check that. But otherwise, I'll just continue with my count as 1 and 2 and 3 and 4 here, and looking up for wave 5. I know there's a problem here because we've got overlapping wave structures here, but sometimes tops just never tops and bottoms. Sometimes they finish like perfectly, and other times they don't. They all get a bit messy. So we just need to use a little bit of wisdom and foresight here, and just try to track the evidence. But let's just see how we go with this wave structure here. The alternative count here, let me just go to the 6-hour chart. The alternative count here is looking at this as 1 and 2 here, and then all of this is wave 1 here, and an A and a B and a C wave here, and then moving up. So that will come a little bit lower down. It can come down to that point there. I mean, of course, it can come a little bit lower as well, but it can't come lower than that blue wave 2 there for that. So we'll just see how this goes. But once again, we're looking for that ABC pattern here. So let's just allow that to play out, and then we will make decisions about if we've got a bigger bear market and if we should be adding to positions in that space. Let's just go to the 4-hour chart, and the 4-hour chart is the same as the NASDAQ here in this case. So once again, we know that this wave 4 is overlapping, so you can throw your tomatoes. I understand that, and I'll try and dodge them, but once again, we're just looking for this A wave, B wave and C wave. That's the 38.2% retracement level. This is the 50-60% retracement level, so it's down a bit further than that. We'll just go to the hourly chart here and just tune into this a little bit more. So yeah, just looking for that A wave here. Of course, it's hitting on the 3700 over here, so that's going to be a bit of an issue. But the B wave and the C wave coming in here, and then coming down in 5 waves here. So we just really need to watch that 5 wave structure to see how it plays out here we need to see that move up from that point. So let me just get these into, oops. So let's just see if we get what happens past this 5 waves here in this case. If I just go to a tick chart here to bring this in a bit closer here, once again, this is our 5 waves down through here. Won't need to go over that again. And this here can be wave 1 and 2 here, and wave 3 here, and wave 4 here, and then going up for wave 5. So I don't know that just yet. I mean, if it's a wave 4, it may get a bit more complicated, but if that pushes up through there, then what it's telling you at that point is that it will be 5 waves at that point, okay? And if that's the case, then you're going to have this corrective move here, and then you're going to have another 5 waves here for this. This new upgrade allows me to draw with the tick, to draw on the right hand side of the tick chart now. Like last time we couldn't do that, so that's a big improvement. But an A wave, a B wave, and a C wave here. So you could probably short this through here as well if you wanted to. It may, that would be, I know we still need that ABC pattern. So it may be worth a short. Even if that gives us, if I just take this, let's just plan that out a bit better. So I'm just thinking even at this, oops, a daisy. Even if the C wave down here is shorter, is only 61.8% of that, that will just bring you back down to the last low here. So it's a bit of a tough one, but it could be worth having just half a position in there as a bit of insurance that we can add to later on for that. You could short that higher up here as well. So you could also follow these 5 waves up here and then short it just in this space here, or if you can count the actual 5 waves here, that's fine. We also need to look at where that 61.8% is, because sometimes, you know, it just becomes hauntingly accurate, and other times it just misses it so much that you kind of wonder what's gone wrong with the world. I mean, we'd also pretty much expect, I mean, with the debt in the world and the printing of money, there won't be a lot of change in Fed policy as well in terms of the overlay of the coronavirus and things like that. So, you know, we can be in for a rocky road again as well in 2021. So, yeah, just be prepared for more of the same in one way or another. So you could short it in this box here, have a small position, and we could probably look to add to that. It may just come down to this point, but if this market is going to turn into a big bear market, let's just say that for a moment, then this is the area that we need to build into. Now, we don't have to overdo it, because we know that we could get, you know, looking at Amazon and stuff, we know that the market can move up from that point. But if it does get out of control here, then this is the point that you'd want to be shorting it at. So not to overdo it, but just to, you know, build in a small trade that we can add to. Because if this becomes down here in 5 waves, what can happen is that we get an ABC back at that point, back up to its 61.8%, and then we go down again. So then we want to be shorting through that space there as well. And of course, use the levels, they'll be, and the price on the side, though, you know, obviously that's all going to be helpful. It's sitting in group 2 here. And in the bigger picture as well, you know, we've got this here at 38. So 8 is part of minor group 2. So 8, 72, and 650 in here. So that's the other level in here, just here, 650. So that's all within minor group 2 here. So in this case here, we're looking at 38, 8, 72, and 650 here. So really all of this is occurring in minor group 2 here. So if it finds this as the resistance in group 2 here, then we'll be going down further from that point. So we'll just keep an eye on that. But yeah, okay. So that's it in a bit of a nutshell. Just recap that on the daily chart. So the recap is that we know that on our website that we've got a wave count here that has a top in play here. And if that's the case, then this can drop much lower through here. So if that's the case, we know that we have 5 waves down here. We know that we're going to have a little correction rally here, and then we can come down. So we're either going to come down for a little ABC and move up, or we're going to come down for the bigger picture here. So it's worth giving consideration to at least the short side of this for the time being, because even if the market does move to the upside, it's not going to be, it's really this pathway, each leg is different. So this is a leg here, but this leg here, that's all the same leg here, isn't it? So we've had spikes down here before. We just need to see if we're going to be breaking that out of this leg here. We've been in this leg and we're still in this leg. We need to figure out now if we're going to be breaking out of that leg, or we're just going to be continuing on that in that leg here, which has been pretty, it hasn't been a very nice trending sort of situation. So we need to see if we're going to be breaking out of that. So that's what we'll be looking at tomorrow. Alrighty, thanks for that, tuning in. Cheers.